Good evening and welcome to Africa Business Weekly, your wrap of the top business stories from across the continent. I'm Karabo Mashaba. Coming up on the show today, we unpack Afreximbank's vision for intra-African trade, and shifting gears, we look into Africa's startup economy, which has raised a whopping $93 million in August, and this is according to the latest Big Deal report. Finally, we recap on Southern Africa's listings. All this and more throughout, so do stay tuned. Of course, as always, I'm not alone. I'm joined by my colleagues David Alabi and Tabitha Muthoni, who will bring you insights from their respective West and East regions. Now let's kickstart the show in Kigali, where Tabitha Muthoni is on standby.
Hello, Karabo. East Africa has been buzzing with activity across the continent. To kick things off, for Africa to accelerate economic growth, it needs to trade beyond its borders. Incoming president of the Africa Export-Import Bank, George Ilombi, shared his vision for intra-African trade with CNBC Africa at the Intra-African Trade Fair 2025 in Algiers.
The subsequent IATF, which Afreximbank started, was also a response to the call by African heads of states to make sure that the trade fairs happened. But why the trade fairs? It's just so that you can demonstrate to Africans in other parts of the continent, they meet together and they see the capabilities of other parts of Africa. It is, as a means, it's commercializing what we have. If you produce, you go to the trade fair and you display, then that makes it possible for us to know what is happening elsewhere. But this is just one way to address the overall need to trade. A payment system also has to support that. The production that we refer to and the infrastructure that goes with it is part of the process of supporting that. So the IATF is only one item in a series of many that Afreximbank is trying to address so as to ease that trade amongst African countries. And the success of these trade fairs speaks for itself. That's why we repeat them. Where is the success? In the previous two, the level of contracts signed were in the region of 40 billion. And in Afreximbank, we take particular care to keep a record of those trade deals being signed at the IATF. We follow them up, and those ones that need financing, we finance them. Those which can be financed better by local banks because of the size involved and the nearness to the parties, we then provide lines of credit for those local banks to do so. And we do keep a record of how those are performing. Our performance rate is somewhere around 80%. That's extraordinary. If you have deals of $40 billion, and 80% of those deals are carried on from start to end, and the trade actually occurs, then that's a remarkable success. And if only for that particular reason, that every 2 years, you generate somewhere around $44 billion worth of trade, and then you execute somewhere around 35 billion. If only for that, every 2 years, you should do the trade fair. So we think it's something which is extremely useful for us as a means of sending the message across that Africa has to trade with itself. But beyond Africa, you could see from the trade fair here in Algiers that you now have exhibitors, private sector from Switzerland, plus the Swiss state system, the Canadians, the Russians, they're coming from all over the world now to exhibit in this. Private and public sector. Usually, private sector would go because for them, they see an opportunity. But when the public sector also begins to take part, the public sector, which is non-African, then it's beginning to tell you that for them, this trade fair is also of strategic importance. Strategic importance. It's just a message they are giving that they would like to see Africa turn towards their own products and turn to trading with them in a strategic manner. So we thank you people for trying to get this message across. Try and do so most critically, but the message must go across that this is a trade fair to seek to resolve some of the challenges of African trade.
Turning to Rwanda, strengthening anti-money laundering measures is a priority as the Capital Market Authority works to safeguard market integrity and expand the investor base. We spoke with CMA CEO Tapela Shile about new regulations, programs to support smaller companies and other key market developments.
We have really done a lot this year and also had a number of successes this year. Some of the successes that we have done is Parliament's approval of the new CSD law, a Central Security Depository law, which is a world-class law benchmarked by international standards, and therefore we are also now working on the regulations. Also, is quite a consultation in terms of the virtual assets law or law regulating business virtual assets. It will be going to Parliament probably maybe in the next 2 months or so. We managed to also complete that, and also the finalization of the CIS regulations. We finalized the collective investment schemes regulations, and I think it will open up a lot of future opportunities to establish CIUs or collective investment undertakings in Rwanda. I think it's a big plus. But most importantly also, the market has been able to raise a record 210 billion rand and francs in terms of companies coming to the market to raise capital, and they raise capital to expand their services and their productive services and their expansion business plans. So I think which is typically the role of the capital market. So it's been a big success, and we are looking for a few more listings before we close 2025. But the other thing that we also did or achieved is there's a general rise in asset under management for collective undertakings in Rwanda, unit trust, by Arnet and by BK Capital. We've had a massive, close to about 25% rise in terms of asset under management and the number of investors who are investing in unit trust. It increased from about 22,000 last year to 50,000 plus within a period of a year. And this is due to the massive education efforts of the CMA, Capital Markets Authority, and the unit trust holders. I think it's a huge success. But also one of the things that we also did in terms of the market education this year is we reached all the four corners of the country. We had some presentations and sessions in the Northern Province, in the Southern Province, in the Eastern Province, and also in the Western Province, and also in the city of Kigali, which is something that we have not done in a very long time. And I think the numbers are there to tell the success of these outreach activities. But we also, while we are looking at developing the investor base in Rwanda, we are also looking at developing the foreign investors coming into the Rwanda market. We have a project that we are carrying out, which is going all well fine, with capacitating our custodial services providers, and also in terms of the knowledge, and also in terms of their network in the world, because capital flows in Rwanda, especially in capital markets, will come through custodial services. That's a big plus. And then on the AML side, as you might know, it's common practice around the world that countries go through national risk assessment for AML and AFCT, and Rwanda also went through this. And currently, there are a lot of other measures that we are doing as the regulator in capital markets, together with other coordinating agencies, to actually improve Rwanda's stature in dealing with issues of money laundering, issues of terrorist financing, and putting measures in place and controls in place.
That's a wrap from East Africa. Back to you.
And those were just some of the conversations driving East Africa this week, but we do have more coverage for you from the West. David Alabi is on standby. Hello, David.
Hello, Karabo. Now from our West African desk, the governor of Cross River State, Basi Otu, says the state is ready and geared up to host the African Sub-Saharan Network 2026 investment conference. He also highlights that the state's investment potentials are enormous, while assuring investors of ease of doing business.
I believe that Afrexim is doing very well, knowing exactly where it pinches, because the moment you are a solution-solving institution, I believe that the milestones covered are something that take decades. And what that is going to do to all sub-sovereign is going to be very tangible, both in terms of addition. Because when we're looking at, for now, we are talking about 42% to 44, or what I would say 4%, 4.2% to 4.6 added to our GDP, 2026 to about 2029. It means that we need this type of interventions, which will start from directly building from the blocks, the foundations, for it to add this kind of impact, which is going to require. So that fund is very, very good and is going to go a very long way to cut some of the bottlenecks.
Yeah, because now, moving up that notch from this commitment here, now your state is then going to host the next AFSNet. Speak to what this would mean for the state in terms of preparation and also the outcomes that you're expecting.
Our state is already actually geared, keyed, and ready. What it's going to mean is going to open the state to a lot more hostings of similar events like this. We already have Afrexim as very serious partners in some of the things that we're doing. I believe that this will bring Afrexim right down to each and every doorstep. People will know the bank more and will know the extent of their commitments in trying to make sure that doors of opportunities and potentials are opened. Because we are not just looking at big tickets alone. Some of those big tickets trickle right down to what we will say those of our young people that don't have the opportunities are going to be taken on. Because we are looking at digital inclusivity in all ramifications, and we're also looking at smaller projects like grower schemes, which will go right into rural areas to make sure that all these people are put together. So the moment the focus is on a big event like this, which will bring all the governors together, I think that the trickling down effect, both in terms of addition to the economy and what it's going to do in terms of confidence to others, would be something that will be substantial. That's what it's concerned.
Yeah, because talking about doors of opportunity, then the Investopedia, now a compendium that more or less highlights all the strong attributes of each state of Nigeria, one of which your state is also included. Now, I'd like to speak to what investors have to look forward to whenever they think about your state.
Well, for us, I think the investment potentials are actually enormous. And when we want to look at it, you look at what PwC, the consultants and other organizations have come up with. I think apart from maybe one state, we are the next destination, investment destination. And we have put a lot of things in place. If you're coming to the agri sector, we have done our investigations right from the soil. We have a digital application which you can assess whatever chemical content, biological, whatever you can grow there and what it can produce and also give you.
And next up, 33 African startups raised $93 million in funding through $100,000 plus deals on the continent in the month of August. Well, that's according to Africa the Big Deal's latest report, which notes 3/4 of the amount were raised as equity while the rest was debt. Max Giacomelli, co-founder of Africa the Big Deal, says he's optimistic the ecosystem will see positive year-on-year growth after 2 consecutive years of decline and likely to close the year with over $3 billion raised.
First of all, obviously looking at numbers month on month, you see a lot of variations because if a deal is announced at the end of a month or at the beginning of the following one, it can make really big differences. So we don't look too much into that when we care about longer trends. But there is a big difference between August and July. As you said, 33 startups in August raised nearly $100 million in Africa. In July, the total was $550 million. So there's a really big difference here. I'd say in August, maybe 2 notable deals over $10 million were Coolbox, a startup born in Nigeria that provides solar-powered refrigeration, but also Hewotele over in Kenya that works on oxygen supply. And overall, August has been a pretty balanced month in terms of the different sectors represented, also in terms of the different geographies, which is mostly due to the absence of very large deals that dwarf all of the others. And that's probably the big difference with July. As I said, July was over $500 million raised by startups on the continent. And those are levels we had not seen in more than 2 years, basically. But those two deals were particularly driven by this number was particularly driven by two very large transactions, two debt transactions by Sun King and D-Light.
And now, talking about the composition at this moment, we're also seeing the concentration here, still Egypt, Nigeria, and then Kenya. But let's talk about notable exits as well. That's also one of the key dynamics in the mix here.
Yeah, so you're right. Geographically, if we look at the year to date, 80% of the funding has gone to startups in either one of the quote-unquote big four markets. So that's South Africa, Nigeria, Kenya, and Egypt. So it's 80% going to those. As a reference point, they represent about a third of Africa's population and about half of the continent's GDP. So they punch above their weight in terms of how much startup funding that they raised. Nigeria specifically is at number 4, as we're looking here, specifically talking to a West African audience. But there's good activity in also in the region from what some people sometimes call tier 2 markets in Western Africa, which means that Western Africa actually ranks at number 2 in terms of sub-regions in Africa, in particular thanks to the debt raised by Wave a couple months ago, but also about $50 million raised by startups in Ghana. And the reason behind this, the dominance of those 4 markets in particular is, I would say, is the critical mass of entrepreneurs and of investors in those markets, but also the fact that there's enough pipeline to attract the larger deals. So all the pre-seeds and seeds deals of the past are now translating into Series A and Series B deals. And as you were saying, we've also seen recently quite a few good exits, and I'll mention 2, the 2 of them actually out of South Africa. One is the exit/merger of Herex and Ergo, health tech company that merged into a new entity, transaction at around $100 million, and another almost $100 million transaction, which was the acquisition of the fintech eCoca, and sorry if I mispronounced that, by Nedbank, also in South Africa.
Well, that's it from here. It's now back to you, Karabo.
Very interesting insights from our West Bureau. Thank you very much for that, David. Well, down south this week, Psilocybin Holdings Limited, the country's first cannabis special purpose acquisition company, listed on the JSE's AltX board last year with an ambitious strategy to acquire Psilocybin Pharmaceutical, which is the first local entity to secure both cultivation and manufacturing licenses for medical cannabis. Now, the company has received the green lights to move to the JSE main board, marking a major milestone in its growth journey. For more on this milestone and the road ahead, CNBC Africa spoke to Gabriel Theron, who is the CEO of Psilocybin.
Our first milestone was to get onto AltX. In 2022, we did a failed IPO, and then we had to go back to the drawing board. We successfully listed last year on the AltX with the SPAC vehicle, with the target to go and find a viable asset, which was ourselves the operational Psilocybin Pharmaceutical. At the time, Psilocybin Pharmaceutical was not profitable, so we couldn't take it to the main board. So that's why we used the strategy through an investment vehicle like a SPAC. And yesterday, the shareholders voted through that we now successfully acquired Psilocybin Pharmaceutical as a whole, and Psilocybin Pharmaceutical also qualified now for a main board listing, which means we meet the criteria for the JSE of more than 15 million profit and more than 500 million in share capital. So we met both targets and or milestones, and JSE then allowed us now to go to main board, which is on the 29th of September.
And I don't know why this feels like a massively long journey, but you were part of many who really loudly spoke about the sector, this industry, the potential for investments into cannabis, medical cannabis, and all the licenses that came out then. What does this mean now for you as an entity? You've got the cash, you've got the listing. What do you do now?
Now we grow. So now we grow our global footprint. There's some other news that will come out shortly as well in terms of some growth investments we've done. But now we grow. So now we've been focusing on Australia up to date, and now we're going for our EU GMP, which will then open up Europe for us. And once Europe is open, or once we have our EU GMP, the world is our oyster. We can supply into the whole world.
So you've got early mover advantage on this particular one, because it's not been easy. I mean, the licensing agreements that are the licensing, the regulatory hurdles that everybody has to cross has been interesting. But let's stick to the JSE part. So the spec model was quite interesting. You've walked through the journey. Maybe you can unpack that from 2022, to spec to Altex to JSE.
Perfect. So in 2022, we had a very ambitious attempt to try and get onto the JSE with a spec vehicle, with listing the entity through a spec vehicle, but we could not find any financial backers. But during the roadshow, we actually found a group in Malaysia called Alps Global. And after sitting with them, they came in just after we closed and they said, "Can you reopen? We will back you." And we said, "But how long will it take?" And they said, "Well, 3 to 6 months." And we said, "Well, in that case, we'll rather call it a fail. We will refund all the shareholders in 2022, which we've done." And in the background, we continued negotiations. And during 2022, they came to the party, 2023, they came to the party and they invested. And they said, "We will be your backer to make sure that you get onto the Altex," which the minimum was 50 million to get onto Altex. They funded that. We got onto the Altex and started the journey to then acquire. And it took us 15 months to do that acquisition. So there's a lot of red tape to go through.
And in more listings news, Kavango Resources has made waves with its recent listing on the Victoria Falls Stock Exchange, marking a significant milestone for the Zimbabwean market. Kavango, which retains its primary listing on the London Stock Exchange, is using the Victoria Falls Stock Exchange as a secondary platform to expand investor access. The company recently raised $4.5 million during its subscription period. And for more, CNBC Africa spoke to Robert Mubaiwa, who is the head of VFEX markets at the Victoria Falls Stock Exchange.
We are excited, obviously, to have managed to list Kavango listed on our market. So in terms of first day, we are positive in terms of its price. Its share price moved from 0.13 cents to about 0.56, which is about 20%, and that's the maximum which we allow on a day-to-day basis. And on that basis, its market cap was 5.1 million based on the shares which are listed on the local register.
All right, so as I said, early days, but I'm wondering if you do have any kind of expectations on the overall impact, perhaps in the more medium term, that this listing will have on your bourse.
So we are the thing that we're excited about is, firstly, it's a London company which is listed on the LSE. Secondly, that it is affording the local shareholders an opportunity to join and just increasing the shareholders base locally. And that is the second exploration company on the VFX. It just gives us confidence in terms of the outlook, in terms of our strategy for exploration companies on the market. So we look with it in terms of hope that it is going to bring more successful. I think we have seen these two successful listings on exploration company, and it's good for the market, and it also good for the mining sector in the country.
Right. But in terms of Kavango specifically, I mean, you did mention about a 20% increase in the share price from the listing price. Maybe you can also give us a little bit of a breakdown on where and which kind of investors are giving it more attention, as it were, or have a lot more appetite for this counter. Do you have any data that maybe breaks down the interest from the retail market or interest from the institutional investor market?
So as you are aware, I think most of our, in early days in terms of the listing, most of the shares would not be in the dematerialization form. They are still in the physical form. So you have to go through and do the dematerialization processes to ensure that there is a little bit more increased activity on the market. So like you're saying, it's early days, but you are positive in terms of the shareholder spread. We are seeing more and more trades which are coming specifically from the retail sector, and there's appetite which is coming from, if you look at the subscription, it has likely been institutional, mainly institutional, and a few individual shareholders.
Yeah. Early days for Kavango specifically, but I'm just looking at where we are in the year, and we're about to wrap up the third quarter. And perhaps maybe a view on your assessment of how the last 9 months of the year so far have gone for the Victoria Falls Stock Exchange versus your initial expectations in January, sir.
So we are really happy in terms of the pipeline that we are developing as a market, in terms of the people, the discussions that we are having with people with potential to list. But we are happy to report that we have also listed the first REIT on the market in May, and we're expecting another one. There's a submission that has been made for another one. So in Africa, as you are aware, listings are very tough. But I think with 3 submissions that have been made so far, including the listing of Kavango, and we are expecting another SA company which is also likely to list on the market, another gold ETF and an equity instrument. So we are positive in terms of the outlook that we're seeing.
And those were some of the stories making headlines down south this week. And this is where we draw the curtains on this episode. Thank you so much for joining us on Africa Business Weekly. You can, of course, catch all these stories and more on our website, cnbcafrica.com. But until then, stay watching. I'm Karabo Mashaba.